Hey there, everyone. Welcome to today's edition of The Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a sunny Redmond, Washington. Thanks for joining us every weekday after the close as we break down the market action using the best practices of technical analysis. Here it's Thursday, February 22nd. We're going to be looking at, I guess, the renewal, the resurgence of this raging bull market. Up until yesterday's close, it felt like we're in a big pullback phase. Not to be. A small company called NVDA happens to come up with ridiculously large revenue numbers that the amount of revenue that they're posting in one quarter is dwarfing most expectations for full multiple years for a lot of average companies. That's the sort of scale that AI is providing. That's the optimism for the AI trade, and that is why your major benchmarks are up in a pretty big way today. We have the S&P up over 2%, the NASDAQ composite up almost 3%. There are a lot of charts going up. We're going to highlight and break down as many as we can. Larry Tentarelli of the Blue Chip Daily Trend Report is joining us here on the show again, looking at some of those names with constructive setups. He seems to have no trouble finding some opportunities in this environment. So let's look at the charts and see how things played out as we get to our market recap. Before we show you today's charts, I do want to answer a poll question that we had going recently. Don't forget to subscribe to our YouTube channel. You won't miss our next poll question. We asked you, is the next 10% move in the S&P 500 higher or lower? Easy question, thumbs up or thumbs down. 60% of you saying lower, which means 40% of you saying higher. I mean, 10% is a big move, and I think that's the key with that particular question. And when we're creating these questions for our social media outlets, thinking about how to phrase questions, about how to structure them, what sort of options to give you is always pretty interesting. Now, if you think about 10% higher, is around 5,600 on the S&P. So we've gone from, 4,100 to, 5,100 here in about 3 months, in about a quarter, just over a quarter. That would be a big move. That's a long way up. I mean, we're already at new all-time highs here today. That would be way more. That would be a pretty strong move over whatever time frame we're talking about. Now, 10% down gets us sort of down into this range, kind of retesting the gap there in November of 2023. That would be down sort of that 4,500-ish sort of range, 4,550, which would mean we'd have to retrace all the way back down to sort of the summer 23, sort of, November 23 sort of levels. And that would be a pretty steep retracement. That would be about a 61.8% retracement of the rally we've experienced so far. I would probably say that 10% lower happens first, but I don't feel great about either of those things happening now. I mean, I felt a lot more confident about it yesterday before we had this gap higher. And to be honest with you, I mean, I've had a lot of questions about NVIDIA, about growth leadership, obviously reinitiating the uptrend today. That was a very real scenario we talked about on yesterday's show. What the breakdown scenario looks like, how a market corrects if NVIDIA disappoints. They did not, right? They sort of posted some knockout numbers, which means this AI-fueled frenzy continues. And I would say in this sort of environment, it pays to be a trend follower, right? And again, up until today, I don't think we've seen enough to suggest we're really breaking down. I just see signs that we're in the later stages of this rally. Continue to follow trends until proven otherwise, and then think about how you can lock in and stay with things that are working. Because I tell you, in this environment, there is nothing more painful than selling early and selling after a 20% gain and leaving a 200% gain on the table. I've been there at times, and it is not a joyful place to be. So put your trend following cap up and on and continue to ride this market as long as humanly possible would be my humble suggestion to all of you. Let's keep looking here at the markets on our market recap. The S&P up over 2% today, another new closing high here. We're just shy of 5,100. Ending the day around 5,087. The NASDAQ composite up about 3%. The NASDAQ 100 actually made it a full 3% higher and closed just above 18,000. The NASDAQ composite just above 16,000. So again, growth over value, but there are a lot of value-oriented parts of the market doing just fine today. It was not just one area. It's kind of an everything rally type of move today. Mid caps, small caps, all up as well. The mid cap S&P 400 up 1.5%. The S&P 600 small cap index up 0.3%. Now, when I was taught this whole investing thing, I mean, early days when I was just learning the basics of what a small cap stock is versus a large cap, I was taught that in a bull market phase, you really want to see small caps rally, and you would expect that small caps would outperform. NVIDIA surprising to the upside and up double-digit percents today, I think is an exclamation point on the markets in the modern era. The modern era being the last couple of years. I think we're in a new era of the mega cap growth names dominating in every way, right? Small caps don't have to lead for the market to be in a sustainable market. We've experienced that in many ways here recently, but I think that playbook is feeling less and less of a way of appreciating the dominance of these names like NVIDIA, now one of the largest 5 stocks in the world. The VIX actually moving down slightly, not a full point lower, but down sort of in a 14 handle, 1450 or so. So again, volatility sort of not really spiking to the point that you would be concerned, sort of remaining in the mid-teens, and that's sort of in a normal fluctuation type of range. A VIX above 20 would be a red flag. I have not seen the red flag signal just yet. Looking over at interest rates, I mean, no real change on the 10-year yield, to be honest with you, which is interesting, right? You saw how growth stocks rallied. You see how our major equity benchmarks rallied. Bonds were actually relatively quiet. The TLT, which is a bond ETF that we track, up about 0.5%, which is not a significant move. Most of the yield curve really not changing a whole lot. The 10-year yield is essentially where it was yesterday. So rates really haven't pushed higher to a strong degree. I think that's one of those charts to keep an eye on to see if we get any sort of movement. Really haven't. The dollar, no real change from yesterday as well. Looking at the commodity space, again, some things changing, but not on average. Oil prices were higher, copper prices up, silver prices slightly lower. Gold essentially a wash from yesterday's close. So I would say no big movements in the commodity space necessarily, although energy certainly not one of the strongest performers today. Bitcoin actually down slightly from yesterday. Ether prices slightly higher. Ether still threatening that 3,000 level after breaking above it earlier in the cycle here, and Bitcoin remaining just about 51,600. With the 11 S&P sectors, not surprisingly, with NVIDIA up over 10% today, the XLK is gonna be at the top of the list. I think that was sort of expected. So up 3.3%, by far outpacing the rest of the market. Consumer discretionary and communication services round out the top 3, both up over a 1.5%, with the XLY up almost 2% today. Utilities, the only one of the 11 S&P sectors actually down today, down about 0.8%. Energy slightly higher, real estate up about 0.25%. So these are, generally speaking, more defensive sectors at the bottom of the list, more value-oriented sectors like energy at the bottom here. When you're looking at some of the leading names, this is the Magnificent Seven and Friends group that I have. NVIDIA, the big winner, up over 16% today, and so many eyes. I mean, yesterday, I feel like when you think about the Fed and how that's one of those big macro tells, I can't remember a time when we've seen more fascination and more focus on one company's earnings than on NVIDIA in the last 24 hours. Had a lot of media requests for comments on NVIDIA, so much focus. I saw it pretty much mentioned everywhere. And again, what happens when they surprise to the upside, which they did, it is just like throwing gasoline on a fire on your grill. Like that thing is flaring up, and it's certainly what we're experiencing here today. I would argue that the challenges we have to further upside are the fact that this optimism has been fueled by excitement about the future of AI and the scale of the growth. And I think some of the numbers NVIDIA is throwing around were pretty staggering and pretty impressive. At the end of the day, at some point, these trends pause and they pull back a little bit. Today is not that day. So as a trend follower, Meta, Amazon, Netflix, and most of these names, all of them in the green, but many of them up significantly today. Let's go to a daily chart of the S&P 500, just sort of check on how things played out. So with today's rally, and again, with NVIDIA up 16%, that pushes the S&P and the NASDAQ 100 up quite a bit. The S&P finished higher, just over 2%. And you can see that this gap puts us right back above trend line support. This green trend line is connecting the October low, the mid-January low, the late January low, the close from about a week and a half ago. We highlighted this earlier through the course of this week that we've now broken below that trend line. That was an initial warning sign that things were starting to change. I guess not. We're actually right back above that trend line. So for now, I guess I would have to label that as a failed breakdown. And that's sort of a general term for you had a trend line, you're at a support level, you see an initial break and you think, okay, that's the signal, but then it's a whipsaw. And a whipsaw is an initial signal that doesn't follow through. And I think we probably saw a hint of that going into yesterday's close, well, NVIDIA actually sold off today. The S&P and the NASDAQ actually rallied in the last 30 minutes of trading and actually finished slightly positive. Maybe a bit of a preview for what we were expecting today. So the S&P now firmly above 5,000. I think the same rules apply. Watch the trend line, watch moving average support. For now, this market still appears to be in a pretty good uptrend. Let's look quickly at the chart of the QQQ, and you can see sort of a similar sort of environment. What's interesting is the S&P, as of today's close, making a new all-time high yet again. The NASDAQ 100 actually not quite doing so. So while this felt like NVIDIA is telling you, all sunshine and roses from here on out, I would say some of these charts still not technically broken out. So with the QQQ, I'm watching the high from about a week and a half ago. We gapped higher today, but not above. We did make a new closing high, but on an intraday basis, we're still sort of testing that level. So if we can close above there, that's around 440. I think that certainly clears the way to further upside. With the gap higher, that also makes another higher low. And that's what we've talked about many times, right? In an uptrend, what's the definition of an uptrend? How do we know that the QQQ is in an uptrend? It's a pattern of higher highs and higher lows. So with today's gap, we make another higher low. Now you're looking for a higher high, and we keep watching for that pattern to continue. And I would say this market and other bull market phases are innocent until proven guilty. Don't sort of assign guilt before the chart tells you to think negatively about it. Higher lows are bullish, and that's what we're sort of seeing here so far. Looking elsewhere at sort of that macro level, let's look at bond prices. Interest rates, of course, are elevated relative to recent trends, but not by much. And I think what's interesting about the chart of the AGs, we often refer to the TLT. The AG is a little different. So the AG follows the old Barclays. It was the Lehman AG index, and became the Barclays AG, and then the Bloomberg something AG, and now it's something else, but it's the same benchmark. It's a big bond benchmark that covers treasury bonds and corporate bonds all together as like one big benchmark. So if you're wondering what is the fixed income market doing, if you can evaluate that with one data series, AG would probably be the ticker I would use to make that initial assessment. And look at what happened here. Now, this was a very clearly defined, I would argue, bull flag pattern, that is. A bull flag is kind of looks like a flag, right? You have this flagpole, the initial run higher off of the October lows. And keep in mind, this is as stocks are rallying in November and December, bonds are rallying as well, right? Then you see this parallel channel, a downtrend channel, counter to the previous moves. So we're going against the larger trend, and we have lower highs and lower lows. And it's sort of two parallel lines can capture the data very, very well. That's called a bear flag. Now, the signal you're looking for, you're waiting for a break out of that flag to the upside. And that's usually a pretty good buy signal, and a pretty major one. That basically implies that the length of the flagpole, you actually project that. So that suggested much higher bond prices, much lower interest rates, but it was a failed breakout, just like the S&P, sort of a failed breakdown, breaking below trendline support and then bouncing higher today. You actually had a whipsaw there with bond prices, kind of breaking briefly out of that flag pattern, briefly to a new swing high, but then stalling out, coming right back down. And now it's back into that same trend channel. So you're actually seeing higher rates, lower bond prices. We'll talk with my guest today, Larry Tentarelli, about rising rates, what that might do to this, again, this AI frenzy that we're seeing. I do want to point out, I forget actually if I have a chart of that in here. The HYG was another, yeah, we do. The HYG is another ETF I want to look at. And we have Ms. Schneider of Market Gauge on the show. She often talks about high yield bonds. And we'll either look at the HYG or the JNK. Those are the two pretty liquid, pretty widely followed high yield bond ETFs. And essentially what we're looking at here is a range. I mean, I would call this a basing pattern, a consolidation phase, right? High yield debt rallied in November and December off the October low, while stocks have continued higher in January into February. You're actually seeing a lack of support from high yield. Now, it is very much range bound between around 78 on the upper end, maybe 77.50 or so, and on the downside around 76, 76.50. We've sort of been in this range for a little while, really haven't broken out. And I think in a lot of ways, this sort of pattern is very simple. It's very straightforward because one of these things is going to break. Either we break out to the upside or break down to the downside. Now, high yield debt can be a really good indicator of risk appetite because high yield bonds are basically the debt of really risky companies. So if this chart is breaking out, pretty bullish sign, not just for high yield debt, but probably for stocks as well. So when you think about what would sustain this rally beyond what we've seen just today after NVIDIA's earnings, I would be looking at the HYG to see if we get a breakout there. Let's look at some individual names here to round out our market review, or market recap, that is. We're talking about NVIDIA with today's guest, Larry Tentarelli. I do want to highlight that a lot of semiconductor names, a lot of other technology names are moving up to complement the move that we're seeing in NVIDIA. So AMD, obviously in the same group, sort of the second largest player in that group, with a nice gap higher today. Again, similar to what we saw with the QQQ, not quite breaking out just yet, but really close, right? So we sort of had this consolidation pattern, a bit of a flag look to this pattern, and we may just be breaking out today. I want to see if it can get above that high from mid-January, but that kind of might be an interesting one to watch, because if we do break out, that suggests much further upside beyond current levels. Names like Meta come to mind. Now, Meta is just barely, maybe, I guess not really, I don't know if I could call that yet breaking out, but same sort of thing. A lot of these names, right, had a gap higher. Meta, Amazon had gaps higher around earnings in the last 4 to 6 weeks ago. Now sort of stabilizing here. We're almost just quite breaking out on Meta. And again, I think the bull case from here involves these recent price gaps holding, which they appear to be doing so far, and then also a breakout to the upside. That's what I'd be looking for on Meta. Now, it's not all good. Random other charts to show you. Sunrun is one of the worst performing names in the S&P, down about 18%. What's interesting about this one is the gap lower actually takes us back below the 200-day moving average. Think of this as sort of a bear flag, right? A bear flag is when you have a move lower, and then you have this counter trend move higher, higher highs, higher lows. You break a trend line using those swing lows, and that's usually a pretty negative sign for a stock like Sunrun. Look at these candles here, and I'm going to show you a zoom into the candle patterns here. See these candles here at the low in January, here again at the low in February. Those are hammer candles. A hammer candle is when the open and close are near the upper end of the range. You have a long lower shadow and minimal upper shadow. That's often a bullish reversal pattern after you have a drop, because think about what happened, right? We're selling off, we open here, we trade all the way down, but by the close, we're back up to the high. So during the day, there were signs of accumulation in the short term. That often indicates a nice rally off of support. We saw a similar pattern here. We're not seeing that pattern today, which is why I wanted to contrast what we saw. So if you think, all right, this is just retesting the lows, that's great. But you actually had some bullish candle patterns, though, there indicating that we were probably going to have an upside reversal. That's not a bullish candle pattern today. That's a big distribution candle. So keep an eye on that if you do still have a position or are looking at that as an opportunity. I'd be concerned about what may come next. Heavy construction stocks we've been talking about, we've highlighted, and I know when Grayson Rose and I sit down and do our monthly top charts to watch for the month to come, I don't remember if we had any heavy construction names this time around for February, but I know in previous discussions we certainly have. Within industrials, we have a number of groups that have actually done quite well. PWR, which is a stock, Quanta Services, about a $34 billion market cap, gapping higher today, up over 10%, breaking to a new 52-week high yet again. So you're seeing a resurgence of the uptrend after testing an ascending 50-day moving average here just recently. Etsy is an interesting one. Just to finish off as a reminder, I mean, when you think about how strong charts like NVIDIA look as of right now, because they just continue to push to the upside, I would always reinforce the fact that charts also can go down, and there are examples that we could highlight. I think Etsy is one of those. If you're getting excited about Etsy in this sort of area, I would remind you about Paul Tudor Jones' famous comment, "Nothing good happens below the 200-day moving average." I would remind you that there's a value in waiting for stocks to get above moving average resistance, because until they do, what it's telling you is the trend by definition is down, right? Charts below their 200-day moving average are charts where the short-term trend is below the long-term trend. And so, after a breaking down of the 200-day in March, we've had a number of retests of the 200-day that have all failed. Most recently, the RSI stalled out right around 60, which is pretty characteristic of a chart in a sustained bearish phase. So while we did put in a higher low in January, we haven't been able to get above that moving average resistance. So with these types of charts, I tend to want to be patient and wait for a break above that key moving average. That's when you can think about maybe initiating a position. Until then, I think it says wait and be patient. That's it for our market recap today. Again, a lot of things on the move. We're going to talk with today's guest, Larry Tentarelli, about NVIDIA and the growth trade and how to make sense of what we learned today with NVIDIA's report after the close yesterday. Before we get to that guest discussion, a couple quick announcements. First off, we welcome your feedback and especially your questions. We're going to do an all mailbag episode tomorrow, and we'd love to feature one of your questions on our next mailbag episode. You can email us your questions at thefinalbar@stockcharts.com. We're on the X at FinalBarSCTV, so just tag us in a comment there. And here on our YouTube channel, just drop a comment below the video that you're watching. We'd love to hear from you. I hope to answer one of your questions in our next mailbag episode. We are finishing off some time running a survey, and we would love to get feedback from you. We are in the process of evolving Stock Charts TV. You may notice some shows no longer on our channel. You may notice some new content that we're sharing with you, and we would love your help in helping us shape the future of Stock Charts TV. How can we best help you navigate this market environment using the power of technical analysis and the Stock Charts platform? Just scan the QR code on your screen or click on the link in the description. Take a couple minutes if you wouldn't mind and share some feedback with us. We would very much appreciate it. Also, as a reminder, I'll actually be heading to Dubai over the next week, speaking at the CMT conference there in Dubai. So look forward to sharing some great insights and questions with our friends in the Middle East following the technical analysis toolkit. I want to welcome on today's guest, Larry Tentarelli. Larry's the publisher of the Blue Chip Daily Trend Report, coming to us from Southern New Hampshire. Larry, good to see you again. Happy New Year. How are you?
David, great to see you. Happy New Year to you. Thank you for having me on.
No, it's good. It's been a little while. An interesting day for you to join the show. We have NVIDIA sort of popping higher. The AI-fueled market frenzy apparently is going to continue, although it felt like it was pausing here. We have your chart of NVIDIA up. You know, how do you make sense of a day like today with, I mean, clearly like a reinitiation of the upswing? How do you make sense of what you're seeing on the chart here?
So very strong. I was worried about it yesterday because the chart before earnings, it started to test underneath that 20-day moving average. So I did have some concern going in. The options market had priced in about a 10% implied volatility. So we've been holding NVIDIA, as you know, for a while, since going back to last May. So, but I did buy some more today. So we added to the position. We bought a little bit just after the open, and then we bought a little bit more right before I came on with you, maybe about 20 minutes or so. And I think the stock goes higher. It's in a strong uptrend, just from a valuation perspective, because that's I do once charts start to get breaking out like they are, like NVIDIA, because it's had a run from 473 to 740 pretty much straight up. So when I see a move like that, then it started to pull back. I did have some concern last night, but this move today, it's a high volume move. And I think with what their earnings report was last night, the stock right now trades at 25 times forward earnings. And for a company that's growing, I mean, there's consumer staple stocks. I think Procter & Gamble is, 24, 25. So looking at the chart, I would like to see, so I always anticipate when you have a day that's up 16%, I always anticipate that there could be some back and fill at some point. So I really put about half of the money to work today that I have for the new position. But I'd like to see it, if there's any standard consolidation, I'd like to see it hold over that 720, 740 neighborhood on any pullbacks. But I do think that the chart is going to work higher.
And it's amazing. I mean, the report last night, I mean, the revenues, I mean, over the top in terms of the numbers that they're reporting and the expectations going forward. I mean, I feel like the narrative at yesterday's close was leading growth stocks like NVIDIA now in pullback mode. With what you see today with NVIDIA and a lot of other names moving up, does that change that narrative in your mind? Is this the continuation of growth leadership continuing through the first quarter and beyond?
It does. Technology pulled back over the weekend. I think the tech sector ETF was dead last by daily RSI. So it went from first and it went to last, and now it started to pick up. But if we look just at your chart, we can see really it just pulled back to the 50-day moving average. And what I always build into my thinking, I always expect that there can be a 2 to a 5% standard consolidation along the way in an uptrend. And what we saw with the S&P 500 and the NASDAQ 100, they both consolidated right within that range. The S&P traded just down to the 20-day, and then it made a new high today. Tech did pull back a little bit more, but tech also did have a pretty big run up going into earnings. So, but I do think that today does change the outlook for tech as far as the shorter term pullback. But what I'm really encouraged by today is on the new highs list, you've got the semiconductor ETF, the industrial sector ETF, the equal weight S&P, RSP, that made a new high today. Healthcare made a new high. So I'm seeing strength. India, Europe stocks 50. I'm just seeing strength across the board.
Yeah, the Nikkei finally getting above its 1989 high, right? I mean, the list of things appearing to break out seems to grow and grow. Let's talk about some of the other charts that you're sharing with us. Eli Lilly, I mean, an incredibly strong run, a bit of a pullback here, but today again, along with others bouncing higher. What's the setup here in your mind?
So same thing. Lilly had a big breakout move on that chart from 610 to about 794. Big breakout move after earnings. It pulled back, what is it, $50 on the chart or so. So it pulled back a little bit under 10%. But Lilly to me is the NVDA of the healthcare sector. They're the biggest market cap. They also have, I think, the highest projected 5-year earnings growth rate. And I'm a believer that stock price follows earnings. And Lilly has just been a very strong stock since it broke out, pulled back a little bit, but it's holding over 4 rising moving averages. We've got a position there. I'm planning to add to it. I did not add to it on the pullback over the past 2 days, which I probably should have, but I do plan to over the next couple of days. And this is, to me, Lilly is really one of the key leaders of the market.
Yeah, the NVIDIA of healthcare. I like that one. And certainly, I mean, it's amazing how that pullback again, is just making a higher low sort of on the way up here. The last name you brought with you, Visa, looking at Visa, MasterCard, some of the payment processors, pretty, I mean, resilient charts here. And again, breaking to new 52-week high today. Do you like the setup here with Visa and why?
Great. So great chart. We added this position maybe about a week or so ago. And what I like about it is it's a lower volatility uptrend. So I like to balance out some of my higher volatility charts like NVIDIA and Advanced Micro. I like to balance it out with some lower volatility because I don't want everything going all over the place, at any one time. But what I like about Visa, low volatility uptrend, it's really been riding that 20-day moving average. If we look back since last November, it's been riding that 20-day since last November. It consolidated for about 3 weeks or so. And then it's breaking out today to new highs. And Visa is a strong profitability, very strong chart. And once again, they're a market leader as well, $570 billion market cap. What I'm seeing here is high quality names. So it's not just tech, but Berkshire Hathaway broke out to a new all-time high. JP Morgan broke out to a new all-time high. General Electric is breaking out to a new all-time high. It's what I see, and Berkshire Hathaway is almost $1 trillion company, but I do see high quality market cap leaders breaking out in all sectors. And I think that's very constructive. A big difference today. So I see, So a big difference today is versus, let's say, 99 and 2000, because I see a lot of the comparisons, is in 99, the only sector that really worked was technology.
Sure.
Nobody wanted any other stocks. And what I'm seeing now, when you see Berkshire Hathaway breaking out, if you dial up the General Electric chart in the industrial sector, GE chart, I mean, these are high quality, a lot of nuts and bolts businesses. They're the backbone of the S&P 500, and they're breaking out to new highs. And I think that's a very constructive underpinning for the market overall.
I feel like these are great names to highlight. I feel like so many there have been plenty of suggestion, as you mentioned, that markets overheated, growth stocks overextended. What would you need to see on some of these charts that certainly appear to still be working? What would be like the red flag for you? Is it failing to hold the 20-day moving average? Is it some broader sign of market rotation? What would tell you that this relentless uptrend is starting to pause a little bit? Like, what's that red flag chart or signal you would be looking for here?
Well, if you dial up the S&P 500 chart for a second, SPX, I would like to see that on any pullbacks. I'd really like to see that hold over the 50-day moving average, which is right about 48.39, it looks like. So the biggest thing that I have on watch right now is actually bond yields and inflation. So the 10-year bond yields, TNX, it's actually a bullish chart. And I'd rather it not be a bullish chart, because when TNX is bullish, if we take a look at that trend, it's got a very nice, it's over the red line there, which is the 200-day.
Yep.
The 50-day looks like that's starting to curl up. I'd like to see this stay under 440, and it looks like your 50% retracement level is 438.
Yep.
So this is a double-sided coin. The economy is very strong. The jobs market is very strong. And that's a positive, but it also does generally mean higher bond yields. So the major concern that I have right now is inflation's come in higher. CPI and PPI both came in higher. The PCE report is next Thursday, I believe it is. I would like to see that come in low. So my concern would be is if inflation comes in hot, and if these bond yields start to test under over 440, then I think that could put some pressure on the charts. But I'd like to see those indices stay over the 50-day.
Yeah, it's amazing with all these charts, and again, so many of them breaking out. The Fed, the prospect of rate cuts and when that might happen. That's a whole sort of, I guess, overarching theme we'll probably be grappling with through the course of this year. We have just under a minute left, but I'd love to ask you briefly about energy, right? If you think about areas of the market not particularly looking as strong, things like energy, names like Apache, really not sort of breaking out. Do you look at an area of the market like this that has been lagging behind and see opportunities here? Or is there something you need to see from a group like energy to initiate new positions?
There's a couple charts. So we've got a position in Marathon Petroleum, which is MPC, and that recently just broke out to a new high. So that's consolidating in the upper right-hand corner. I like that chart. I like Petrobras, which is PBR. It's probably my favorite chart in the sector. Just a great uptrend.
Yeah.
Other than that, as far as the majors like Chevron, Exxon, ConocoPhillips, I don't see too much in those charts. It looks like Chevron. I think if you put Chevron and bond yields on the same chart, they look about the same.
That's about right.
I've noticed
about right.
Over time, energy tends to move with bond yields, but I think there's a few. That Petrobras chart's great. Marathon is set up well. PSX, which is Phillips, is a very good chart, and these are the refiners. So in the energy space, I think there's a few really good ideas, but I don't like XLE as much as I like these charts.
Yeah, you managed to identify some of those areas of the energy space that don't look like energy stocks, right? You don't almost cover up the ticker and think it's a semiconductor name, something like PSX. But well done, Larry. I mean, there's some strength, I feel like, in all of the sectors. We'll have to leave it there, Larry. This is awesome. It's such a pleasure to catch up with you again. I hope we can have a regular cadence of these discussions through the course of the year. And until the next time, be well and stay safe there in New Hampshire, all right?
David, great. Thank you so much.
That's Larry Tentarelli. Larry's the publisher of Blue Chip Daily Trend Report. And again, one of my favorite kind of pure stock pickers. I feel like anytime I've ever spoken to Larry and I say, hey, what are some names? And I sort of give him some ideas, he immediately starts popping through some charts that look like the charts I want to find. I don't know what happens in Larry's process to allow him, to empower him to identify consistently good ideas, but he seems to keep doing so. And a great comment there about NVIDIA. I think, certainly we've been talking about the potential for much deeper pullbacks in technology, leadership, and growth stocks. You're seeing a resurgence of that uptrend, but a great reminder to think about some of those key moving averages. As long as they're able to hold key support, these trends are in good shape. Great take there, as always, by Larry Tentarelli of the Blue Chip Daily Trend Report. We've got to wrap the show, folks, and go to the 3 in 3, 3 charts in 3 minutes that tell the story of this market environment. Here's chart number 1. I love the comments from Larry Tentarelli about how to make sense of this sort of move. Larry, pretty optimistic about the strength of the growth trade. It's hard to deny that after the move higher. And again, I'm not a fundamental analyst. That's not the main lens that I use to evaluate the markets, but I would encourage you to check out NVIDIA's earnings report. Look at the transcript, look at the numbers behind it. Pretty staggering numbers. Even if you don't know fundamental analysis, you'll be impressed by the revenue numbers that they're throwing around. I mean, this is the GDP of a small nation that they're throwing around in 1 quarter. So it really tells you about the scope of the AI-fueled trade and the potential for AI that certainly we've seen all around us in the financial industry. From a technical perspective, we had a breakdown of trendline support over the last couple days, and going into yesterday's report, certainly seemed like we were on a path of short-term weakness, but we didn't really make a new swing low, to be honest with you, on this time frame. That's the January low around 610. The 50-day moving average is well below current levels, down around 585. The RSI remains above 50, very firmly so. And so, the gap higher today, I think, sort of continues that trend that we were in. I would consider this a failed breakdown. Maybe we reinitiate trend line support. I think after the gap higher today and after the move, I'll be reassessing NVIDIA from a technical perspective through the remainder of this week. I would encourage you to do the same. Chart number 2, as a friendly reminder, not everything is going up, and there are things that are certainly still in a downtrend, right? I mean, some energy stocks, some defensive plays like in consumer staples, and some materials names as well. So when you're looking at a chart like Mosaic gapping up 6.5% today, I often see people get really excited about that initial gap higher off the lows. Now, there are people that have made a living and made a career out of investing in names like this, completely beaten down sort of the falling knife trade, even buying into the new lows, maybe buying on a day like today on the gap higher. I am not one of those people. Generally speaking, in things that I'm looking at, I'm looking for trends. I'm looking for uptrends. And this is by definition not an uptrend. So what would it take to make this kind of chart look more bullish on the medium term and long-term timeframes? I would say, number 1, we have to get above the 50-day moving average. We have not even done that. Number 2, we'd have to get above the 200-day moving average. We've failed to do that many, many times. And the most recent time we actually did do that was in February, March, almost a year ago, and it stalled out and we came right back below the 200-day. The relative strength index, the RSI, would have to get way more constructive. What marks a stock in a bearish phase often is the RSI remains below 60 on rallies and gets down to the oversold region. We're sort of still in that range. So the RSI would have to get above 60 on a rally. The relative strength line at the bottom, which is Mosaic versus the S&P, would have to improve. So an initial gap higher can be very encouraging. I would think about what checklist you would want to follow, what things you would need to see to get more constructive on a name like Mosaic that has been a chronic underperformer. Finally, SNPS is a name called Synopsys, and I'm focusing on the candle pattern here. Do you know what candle pattern this is? It is a reversal candle. It only really happens in bullish phases. This is called a shooting star candle, and if you look at the shape of it, you will know why it's called that, which is a visual. I mean, it's based on the visual representation of this price bar. So the open and close are near the lower end of the day. You have very little lower shadow. You have a long upper shadow, and it literally looks like a shooting star coming down. So think about what happened, right? We opened around 590. We traded all the way up to 630. And then that was it. And we closed back below the open around 580. So it's sort of the opposite of the hammer candles that we noticed in some previous charts today. It's a sign of a potential market top. So be wary of gaps higher that result in a very bearish candle pattern. That suggests that the buying that propelled us to that gap sort of fizzled out and sellers took control through the course of the trading day. Folks, that's a wrap for the show. I want to thank you so much for joining us every weekday after the close for the final bar. A special thank you to Larry Tentarelli of the Blue Chip Daily Trend Report, joining us from New Hampshire. For Stock Charts in Redmond, Washington, I'm Dave Keller. Be well, stay safe, have a good night.